So if you're doing business in the UAE, you need to listen up. A massive shift is underway because the country's first ever corporate tax deadline is on the horizon, and it pretty much changes everything. In this explainer, we're going to break down exactly what you need to know to get ready.
Okay, let's just cut right to the chase with the single most important detail. This is it, the date you need to know. September 30th, 2025. Seriously, if you run a business in the UAE, this date needs to be circled, highlighted, and plugged into every calendar you've got.
And look, this is not just another administrative deadline. This marks a total game changer for the UAE's business world. For thousands of companies, this is the first real compliance test under this new tax system, and trust me, it's one you really can't afford to get wrong.
So you might be asking, why is all this happening now? Well, we're stepping into a completely new tax era in the UAE. It's all part of a major economic plan to diversify the economy and align with global standards. And honestly, understanding the why behind this date is the first step to navigating it like a pro.
So where did that September 30th date even come from? Well, the logic is actually pretty simple. The law gives businesses 9 months after their financial year ends to file their tax return. Since most companies run on a standard calendar year, their 2024 books close on December 31st. You do the math, and that 9-month clock takes you right to September 30th, 2025.
Right. This brings us to the most practical question of all. Does this deadline actually apply to your business? Let's get into the specifics of who needs to file.
Here's the most important thing to get your head around. You should probably just assume this applies to you. The net is cast incredibly wide. We're talking mainland companies, a lot of free zone businesses, and even individuals whose business turnover tops 1 million dirhams. So unless you've officially confirmed you're exempt, you're likely on the hook to file.
Now, this is where we hit the single biggest misconception out there. So many business owners are thinking, hey, my income is below that 375,000 dirham threshold, so I don't owe any tax. That means I don't have to do anything, right? Wrong. Filing a return is mandatory for everyone who meets the criteria, even if your tax bill is zero. This is the key thing to get right.
Okay, so we've covered the what and the who. Now let's talk about the how. And look, this isn't about stressing you out, it's about getting your ducks in a row. Here is a super clear, actionable checklist to get you on the right track.
Let's walk through this, step by step. First, and this is the absolute best advice anyone can give you, start now. Procrastination is not your friend here. Your entire filing is built on clean, accurate records, so get those in order first. Then you can start pulling all your documents together and, this is a big one, check if you qualify for small business relief. If your revenue is under 3 million dirhams, this could be a real game changer for you. And finally, remember, this is all new for everyone. Don't be afraid to get some professional advice to avoid really costly mistakes down the line.
And if you're still thinking about putting this off, let's talk about the alternative, the cost of delay. The penalties for not complying are spelled out very clearly, and believe me, they add up fast.
Yeah, these fines are no joke. You're looking at 500 dirhams a month for the first year you're late. After a year, that penalty doubles to 1,000 dirhams every single month, and that's all before you even get to the steep 14% annual interest on any tax you haven't paid. The financial incentive to be on time is, well, it's huge.
But it's not just about the money. Think of it this way. Missing the deadline basically puts a giant red flag on your file for the Federal Tax Authority. It can easily trigger an official audit, and that means a lot more scrutiny, a mountain of paperwork, and more compliance costs for your business. So, for our last section, let's try to reframe this whole thing. This isn't just a chore to avoid penalties. It's actually about being strategic. Your very first tax return is a huge opportunity to set your business up for success in this new environment. See, filing correctly is about so much more than just hitting that deadline. Some of the choices you make on that form are irrevocable, which means they can literally lock you into a tax position for years to come. You have to be super precise, especially when you're separating your taxable income from your exempt income. And for those of you in free zones or running multinational companies, the complexity just goes up another level. It's all about getting it right from the very start.
So let's bring it all home with a final game plan. This is all about being proactive, not reactive. It means having perfect records ready before you need them. It means strategically using reliefs to your advantage, and it means knowing when it's smart to ask for help. This isn't just about compliance anymore. It's about solid financial discipline.
And that really brings us to our final thought. This first return you file, it's more than just a legal requirement. it sets a precedent with the tax authorities. It's basically a statement about how organized, how compliant, and how serious your business really is. So the real question is, what precedent are you going to set?